Spotify reported fourth quarter 2024 results before the market opened on Tuesday. Everything looked really good for Spotify. Shares are up about 7% just as trading starts. So I want to go through these results. This is a stock that I've been covering on asymmetric investing basically since this channel started. I'll put a deep dive that I did on the company. And this is really when I started buying shares in 2023. Real near the low, but I think the story then was that Spotify had already won the music business, and it was just a matter of cutting their costs, things that they had already announced back in early 2023, improving those margins, doing things like increasing prices. They've moved in the right direction in all of those areas. Free cash flow is improving. What I think has been most impressive over the past year is the fact that they're expanding their potential market. Not only are they winning in the areas that they were winning 2 years ago, they're potentially moving into things like video, getting better in advertising. So I'm going to dig through some of the numbers and what we should expect for 2025. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's start with the market's reaction early on. Now, I said shares were up about 6 or 7%. It's actually close to 10%. So this is a rapidly moving target. We'll see where things end up today. I'm not too worried about the short-term reaction. What I want to focus on is the business. And this is where things are going really well. They always start with these same numbers. So it is nice to be able to compare things long-term. Also put some charts up here that kind of put this into historical context. But total monthly active users continues to grow up 12% year over year and 5% quarter over quarter. This is, I think, going to be 1 billion users by the end of the decade. So really impressive the scale that they've reached, and that's what's really important for Spotify. Premium users up 11%, ad-supported users up 12%. On the financial side, we're seeing a little bit more growth on the premium user side, 17% revenue growth. That's because of the price increases that they've been able to put through all around the world. Sounds like that's something that's going to continue, which I think is a little bit surprising. They basically didn't increase prices for, I think it may have been all of their history until a couple of years ago. Now it seems like there's going to be a regular cadence. They're going to be working with record labels on that. All the other streamers are also increasing their prices. Maybe not something they're going to do every year, but something that's definitely going to be on the table and is going to be a driver of revenue growth. Gross profit, I'll get to some of the details here, but this margin improvement is incredibly impressive. And this is really the reason that the stock has done as well as it has over the past couple of years. I think there was a lot of thoughts that there was caps on the margins that Spotify could generate because they have to license that content, the music, from record labels. But there's been ways that they've been able to improve this. And most of this improvement has come on the premium side. That's what's really the most surprising to me. I thought maybe they could get to 30% gross margin. They're almost 35% gross margin right now. Operating margins continue to improve 11.2%. That's why you get to free cash flow, $877 million. I remember saying this 12 or 18 months ago that I thought that Spotify could get to $1 billion a quarter in free cash flow. That sounded crazy at the time. We are almost there. This is just versus their guidance numbers. They do report numbers in euros. I should remind everybody of that. So keep that in mind if you are a US investor. But their user growth is premium growth higher than expected, operating income a little bit down. There's some moving targets there as far as costs go and margins go. Part of that is currency conversion. I want to go down here to margins because this is the thing that has really changed for Spotify since 2023 is that gross margins have improved dramatically. Total gross margin 32.2%. Again, I think that was kind of the peak where a lot of us thought that margins could get for just the premium business. But premium now 34.7%. This was driven by favorability from audiobooks, music, and other costs of revenue. One of the things they kind of hide in these numbers here is that they have their marketplace business, I believe is what it called. Basically, artists and record labels paying to get play in Spotify playlists. So something like advertising, they don't really call it advertising, but that's a way for them to basically recoup some of the revenue that they're paying to record labels. So that's going to help their gross margin. The other piece that's doing better is ad-supported gross margin, 15.1%. Over time, as the ad business scales, you would expect this to be even higher than premium. This could be a 30, 40, maybe even 50% margin business, but it really hasn't reached scale yet. And they're kind of moving in that direction. Video will be a piece of that. Their programmatic advertising, which they launched recently, is going to be a piece of that. But that is not something that's going to happen overnight. That's going to be a 5 to 10 year story. Operating expenses continue to be contained in a really, really nice way. Again, Q2 2023, this is when costs really peaked, and they have been declining ever since. Now, a lot of the cost reductions were actually announced earlier than this. As a European company, there are some costs that go into actually reducing your headcount, and some of those costs kind of take a year or so to work through the system. So we're now working through most of those costs. That's why you see a 16% decline in total operating costs. And all that adds up to a drastic improvement in free cash flow. The one to look at here, this is their cumulative free cash flow since inception or since 2016. But the big number is this is the free cash flow generation over the past 12 months, over 2 billion euros in free cash flow. And like I said, they're almost on pace for doing almost $4 billion in, or 4 billion euros rather, in free cash flow. As you would expect, a lot of the growth really is going to be happening outside of North America, in particular North America and Europe, some of their biggest markets, but they're also the most saturated. So a lot of the growth is happening in the rest of the world or Latin America. Those are becoming bigger business, a little bit lower ARPU or average revenue per user. And you see that in this right here. They're not going to be signing up for the premium service at quite the same level as you would see in North America and Europe. The final thing from this presentation I just wanted to highlight is the outlook for Q1. Spotify typically doesn't give very aggressive outlook, so I don't read too into this too much. First quarter is also a little bit different because you have things like Spotify Wrapped at the end of the year. Q4 is typically pretty good for the company, so total monthly active users only expected to increase 3 million, premium increasing 2 million, total revenue 4.2 billion euros, and gross margin relatively flat at 31.5%. So not a massive improvement. Don't be surprised if they beat this, at least by a little bit. But I think what we want to see is progress on some of these initiatives that I talked about. So increasing prices, keeping those margins high. I'm really focused on the advertising business as well. That's what's going to drive things like video. But those are all things that we're going to see throughout 2025. It's not going to be like a switch turns on in Q1. So a little bit tepid guidance. I'm surprised that the market's not focusing on that at all, but could be because they're seeing this long-term picture. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So everything seems to be going very well. Now I want to put some of these numbers into context. So let's take a step back and look at some long-term charts. This just shows the premium subscribers and ad-supported subscribers. You can see that the ad-supported number continues to increase as a bigger piece of the pie. That's in part because a lot of those developing countries are on the ad-supported tier. They're not paying for premium quite yet. This also doesn't quite include fourth quarter numbers yet. So that will be updated. This margin chart also doesn't include the latest numbers, but you can see why the market is reacting the way that it has, because there's basically been a step change in both the gross margin and operating margin for the business. So now you have to completely think about the valuation of the company differently if they're going to be sustainably profitable, which it certainly looks like they are. All of this said, I do want to acknowledge that the valuation is getting pretty lofty. As I'm recording, market cap is $111 billion. Like I said, this is a company that could get to around $4 billion in free cash flow. At that $111 billion market cap, we're talking about in excess of 25, 26 times free cash flow. That's pretty expensive. Now, I think there's a lot of tailwinds behind the company. This is not a stock that I am selling, but it's not one that I'm going to add either unless we get a more opportunistic point. That doesn't look like we're going to get that anytime soon. So happy to ride this wave, but I do just want to acknowledge that like a lot of companies on the market today, this is not a cheap stock. I don't think it's overly expensive either, given that improvement in free cash flow, but it's certainly priced to continue that free cash flow in the future. But let me know what you think about Spotify's results. Is this a stock that you own? I know there's a lot of asymmetric investing watchers out there who are sitting on very nice gains in Spotify. So congratulations on everybody who's in the stock. Leave those comments in the comment section below. Don't forget to subscribe here to Asymmetric Investing. Thanks for watching, everybody. See you here next time.